Morning, everybody. How are you all doing? Everybody survived the aftermath of FOMC. Quite an interesting one last night, wasn't it? I didn't go to my spin class last night. I couldn't be bothered, so I actually watched it playing out. I didn't trade it, though. I did actually trade it, but I didn't make much money out of it. I don't like trading FOMC. It's too volatile. You tend to get stopped out a lot and then get cross. So, yeah. I'll just give it a couple of minutes, wait for a few more to come in. A nice gap fill this morning on the DAX. So if you've got, depending on your broker, some brokers have pre-market and aftermarket data. Some don't. With Robo, I don't get pre-market. So I actually see the open at 7 a.m. UK time, which is when the DAX opens. And I don't get any data from close to open. So I clearly see the gaps. And I'm not allowed to trade that first 5-minute candle. They won't let me. So just really annoyed I missed this one this morning. Really nice gap fill. Straight up. Done. Nice pullback just gone in as well. So potentially a good move building on the DAX. Morning, Diamond. Morning, Andy. I'm going to have to walk the dog whilst listening. Okay. Let me know when you're picking up a poo. Morning, Asemi. Morning, Minpo. So yeah, if you want to see gaps on indices, Robo is actually quite good for gap finding, but really the DAX is the main one that you find the gaps on. The rest you do get the Globex on, but I mean you got one there on the NAS, but obviously these happen in Asia, so I never get to trade any of these. But the DAX one is nice because the DAX one obviously happens at 7 a.m. So you get it quite a lot. So we had one there yesterday, opened up there, traded that back. This was a big one today there. That one filled too quick. There's a little one there that filled. That one didn't quite get filled, which is unusual. There was one there, so that was the gap there. That was kind of already filled anyway, but yeah, when they happen, they virtually always get filled. Not always, obviously, but most of the time. Morning, Johan. Mark. Right, so let's have a look at the aftermath of yesterday. Obviously, FOMC last night didn't get a massive amount of movement last night, which was interesting. So we obviously had the FOMC. The indices went absolutely crazy. I was watching the Dow, basically. I was watching the outcome of that. We had news on the Aussie this morning, which I'll talk about in a minute as well. Made some nice profit on the Aussie New Zealand on that one this morning. And today's news, we've got Philly this afternoon with unemployment claims at 1:30 pre-market. We've got G20 today. That might be interesting because obviously what's going on with Russia. I'll talk about that in a minute. And then we got Bullard and Mester speaking later on. That's part of the G20, I think, anyways. So not sure, but yeah, there's no real news today. We've had the news today. So, and we've got no news tomorrow, really. We've got pound retail sales, which will move the pound, and CAD, but nothing particularly interesting. So no real red news for the rest of the week. So last night's FOMC, I was watching the Dow. and this massive move up on the Dow, which was lovely. I was watching this on M5 unfolding. I took a little bit of a scalp up there. I got stopped out on the pullback. I took a little bit more up there. Then I tried to short it when we got up here and got stung by the shorts. Then I shorted that, made a bit out of that. Then as it pulled back, I shorted it again, expecting an M shape, and got stung there a little bit. Then I shorted it there, and I basically came out about break even. It is a bit of fun. Very, very difficult to make money trading news, because you get these massive... I mean, look at this whipsaw. Yeah, that's the size of that move. Yeah, that's the size of that one. Unless you had an 800 pip stop yesterday on this, you got burnt. It's very, very difficult, which is why I don't usually trade the news. But I was sitting there watching telly and watching it unfold, and I was like, oh, I'll have a quick crack. So I ended up basically roughly where I was. About 5%. So yeah, we had some decent movement on the indices. They all reacted nicely to FOMC. Positive move. The whole thing's obviously been undone in Asia. So no further forward, really. Back to where we were. Back to square one. Nothing much on FOMC from the US dollar. The US dollar came down for half an hour and then went into an accumulation and then pulled it back to the close. So FOMC, no impact. Weirdly, this morning, we had a massive spike on the Aussie dollar news, which is odd. So we had the Aussie dollar unemployment. When that was released this morning, we had a really big spike off the back of that for some reason. So I don't quite know what that was, but it moved pretty damn quick. They came up basically and took liquidity from there. Yeah. So the play down, we had this liquidity run. Yeah. Everybody saw that liquidity run, jumped in short. Then they pulled it back. Everybody jumped in short. They took all that liquidity out this morning. And now they're pulling back. So today I've got this feeling, because we didn't get the liquidity run I was expecting yesterday, which was the run of these lows. So we got the push down to this level, but we didn't run this liquidity. This is where I said yesterday I was expecting them to come with FOMC. We didn't get there. So I'm wondering if today what they've done is just moved up to take some liquidity from there, power up a move to get down here and take this liquidity before they run off today with it. So keep your eyes peeled on the US dollar today. If we get some downward movement, look for a double bottom at 100 ADR today, or a push down below 100 ADR for long opportunities. So we may well get a push down on the US dollar today. So we'll see what happens with that one. But that's kind of the play I'm expecting them to go for today, because it really doesn't make any sense to put this lovely pullback in and not come and grab this. Yeah, everybody that went long and saw that pullback and saw that move, everybody that took that breakout there, everybody's long from there. All of their money is sitting there. Why would you not come and grab it before you manipulate it back up? Doesn't make sense to me. But so that's what I'm looking for today. So keep your eyes peeled on the US dollar. US dollar drop during London, potentially into the start of New York, and then a reversal. So today, indices rising, and then potentially shorting indices later on this afternoon. DAX has had a nice big bullish start. The Dow, what's the Dow doing? Dow's coming down at the moment. So indices are coming down at present. They haven't really gone anywhere yet, have they? So that's the US dollar. RSIs and ADRs. So ADRs, obviously, Aussie dollar. So Aussie dollar, this morning we had the news. We had a big movement off of that, which was lovely. It was positive employment change. They were expecting it to go from 64,000 down to 0 K. As a change. This is the change figure, not the actual number of people employed. That would be bad. Nobody was employed in Australia. And if there was only 64,000 employed, I'd be a bit worried as well. But this is the change in employment. So it was better. So more people employed, better for the economy, all good. The unemployment rate stayed the same. So all positive for Aussie, and we got the move down. Sorry, all positive for the Aussie, and we got the move down, and now back up again. So it was just a whipsaw, just a liquidity run basically. Nothing really fundamental has changed there, but it was decent movement. I'm trying to change that chart, please. So this morning, I wouldn't be surprised if we did get that move up to 125 ADR. So you can kind of ignore the ADRs on the Aussies today because they've really already played out. If you caught them in Asia, brilliant. I mean, you'd be hard pushed to have caught that ADR move down there, but yeah, it's done 100 ADR move back to the other side. So you can kind of ignore that one this morning. Aussie dollar Swiss, same thing. Aussie dollar yen, same thing. Aussie New Zealand, we had that lovely push down. I've been waiting for Aussie New Zealand to get some kind of push down. As I said on this one, I'm looking for a 72 pullback on this at some point. So I'm hoping this reversal alert here is the start of that move. They've taken that liquidity. They've put in a lovely 3-bar reversal, and they've done a reversal alert. They've retested it, and they've pushed down. So it's looking like it's going in the right direction, but I don't like the size of this wick. So I want to see them break and hold down here, Aussie New Zealand, to try and get some New Zealand dollar strength coming through. So yeah, hopefully that's what we're after. So I just seen your comment in there. Okay, so now I better understand what causes the gaps, so I can better see them, even though I do have pre-market data. Yeah. So gaps basically in indices, the market, although these are CFDs basically. If you look at the futures market closes. Yeah. So if you look at your look at here, go to specification for any instrument, it will tell you what the trading hours are of it. Yeah. So this trades from 9 a.m. to 10:55. Yeah. That's when the quotes start. So this is when the market opens. The DAX opens an hour before Frankfurt opens, before the Frankfurt Exchange opens. They allow you to trade it from 9:05. This is what I say, and I'm not allowed to trade the first 5 minutes. The reason they put that in there is to allow the orders, overnight orders, to be executed before you can actively trade it, i.e. what they want to see is a gap fill as fast as they can, because they know everyone's going to play the gap. It's easy money if you see one, most of the time. If it doesn't fill the gap, it will go in the direction of the gap the vast majority of the time, and that's what we saw on the DAX this morning. It was, there's a big, strong move at that first 5 minutes. Yeah, so that first 5 minute candle, we opened here. This is where the market opened. Wasn't allowed to trade that. And you'll find a lot of the time you'll get a gap that will maybe be that big, and you'll find that first 5 minute candle will fill it virtually. So they're giving the pre-market orders time to execute before they allow you in, is really what's happening. And it's the same with all of the indices, yeah. So you'll have obviously automated sessions and pre-market orders going in, and as soon as the market opens, those orders get executed. And depending on where those orders are wanting to be executed, you get the slippage. So the market slips down and opens there because this is where the majority of orders want to be executed, and then it slips back, and that's what you play, those gaps. So when you see them, you'll get them once or twice a week. Ones this size are unusual, but they're really easy. I had one last week. I can't remember which one it was. I played last week. I put it in the Telegram group. Where are we? It was a really nice, easy one last week as well. It was that one. It'll be in the Telegram group. Last Tuesday, it was that one. Yeah. So we closed there. That was the high of the wick. We opened there. We pushed away, took out that high, and I basically played the fade down to there for the Frankfurt Open. And then Frankfurt opened, took it away. That was really nice, easy. I think I made 3% out of it or something like that. They're slow as well. It's very, the price action is very chuggy. You don't get wicked out or anything on them. And they're just really nice trades. But as I say, you can't live on them because there's not enough of them, unfortunately. Huge variance on Aussie unemployment. Yeah, I believe that spike at 450 UTC was the Ukraine-Russia news. Oh, was that what that was on the... right, okay. So that was not the Aussie news. I thought it confused me a little bit when I looked at it this morning. I was like, why is the US dollar reacting to Australian dollar news? It doesn't happen normally. So that was the news on Ukraine and Russia. Yeah, okay, got you. Ukraine denies shelling separatist positions in eastern Ukraine. Ukrainian military, Russian occupying forces fired on village. Oh, God. 18 minutes ago. Right, it looks like it's starting to kick off over there. Russian-backed Ukraine rebels. So I'm just reading stuff out. I'm not telling you what I'm doing. A lot of red news coming in on Ukraine. Okay. Starting to escalate, isn't it? I was going to talk about Russia this morning a little bit. I turned off the EAs on Tuesday morning, Ed, or Monday, because I wanted to wait and see what happened with Russia. And I was just going to say this morning, we have got news now basically where we're not finding that Russia has actually pulled their forces back as we initially thought. They're actually sent another 7,000 forward. So it seems like there is still a lot of tension going on. And this morning it seems to all have started to kick off. So I turned the EAs all back on this morning because I was thinking this thing could go on literally for months. There was news this morning saying that, these tensions could be evident and there for months and months and months. And what you can't do is sit there and not work, i.e. not trade, because something might happen at some point. So I turned all the EAs back on this morning to start auto trading. Now I've just seen that news has come in. I think I'm going to turn them all back off again because this is an escalation, and the likelihood is we are going to get some kind of invasion by the looks of things. If it's all kicking off on the borders, there's a high likelihood it's going to happen, isn't it? I think, personally. So I'd rather err on the cautious side of caution this week. So my plan was to give it until Friday. Then this morning I changed my mind, and I've just changed my mind back. Okay, so I've turned the EA off. I'm not going to do any position trading this week. I'm still flat, so I want to remain flat while that's all kicking off. You can see what the impact is, yeah? This is very evident, right? Normal price action. Yeah, little candles, big price action during high volatility. Yeah, a news event, FOMC, war. And this hasn't even happened yet. This is a couple of shells gone off. Yeah, look at that. If you get caught the wrong side of that, a couple of shells go off and then a load of tanks roll in, this thing could just go through the roof and you will never get back for months potentially. So just be very, 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 very careful. Yeah. If it all goes your way, brilliant. If it doesn't go your way, you're going to be in trouble. It's interesting to see which direction that went on that news. So we've got potential shelling starting. The US dollar goes up. And then it's obviously actually we might be overreacting to this. So if it does kick off, our bias is long on US dollar at the moment. It looks to me like US dollar will spike. So maybe you do want to be building a position long on the US dollar, but you also want to make sure you got stop in place and give it some room. Yeah. Don't go stupid tight on the stop, maybe get in with a few positions, and like I said, there's a lot of liquidity under there. Highly likely they'd come and grab that. Maybe play a swing trade. Stop under there. Couple of positions scaling in down there, with all stopped under there. If it comes down to here, you lose 2% of your account, 3% of your account, 4% of your account. Maybe that's what will happen. But it could go that way. Sorry, bear with me 1 second. The doorbell's just gone because I've got builders just turned up. I will be back in 2 minutes. Sorry about that. I'm back. I got my the back of my house being rendered basically, and the builder's just turned up, and only half of the render's been delivered. He's only got 10 bags and he needs 20 bags. The problem is tomorrow we've got 2 massive storms hitting the UK at the same time with up to 80-mile-an-hour winds. So he wants to come tomorrow now, but potentially trying to render the back of a house in 80-mile-an-hour winds. So yeah, we'll see. So might have a bit of disruption tomorrow, but we'll see. Right, so yeah, where was I? Talking about war and stuff. So yeah, it might be a nice idea. Seeing what's happened off the back of that Ukraine news, we got a spike on the US dollar. So I'm assuming if Russia invades, we'll get a spike on the US dollar. Again, not been through an invasion before, no idea how it affects the markets direction-wise. So war is good for business, obviously, for anybody that's in any type of business that manufactures weapons and all that sort of stuff. So, but we will see. So, looking at what we've got at the moment from a opportunities perspective today, we were looking at the ADRs. Sorry, we're jumping around a bit this morning, I know. There's not much opportunity on the ADRs. They've all kind of played out already. Nice wicks to the downside on the DAX at the moment. Also nice wicks to the upside. Bit choppy in it. RSIs, we've got a couple of opportunities at the moment, but they are opposite direction to really where I would want to go. Euro odd is hit to the downside. We've got really nice wicks down here, and this is a double bottom with that move. So that move started there. As you can see, that's 100% retracement. We've bounced off of that 3 times and rejected it. Obviously, this is against the Aussie dollar. Difficult to tell what the Aussie dollar is going to do off the back of that news because it was a bit whipsawy. I don't like longing the euro at the best of times. So for me, this isn't a great opportunity. But the market does sell off and then it does have to take profit before it starts its next move. So there is a long opportunity here, but could be a very, very small pullback. So I'd be looking for a play sort of up to there, really. It could well go a lot higher, but I don't like longing the euro. So Euro New Zealand is the same as the Euro odd, so only take one or the other. Euro New Zealand's coming down a lot harder, which is lovely to see because that means we've got New Zealand dollar strength coming through by the looks of things. Yeah, good, nice, strong New Zealand dollar. So Euro New Zealand dollar is coming down nicely. This is a short for me at the moment, and it's coming down, so I don't really want to be taking longs there. Apart from that, there's nothing else lit up at the moment. Aussie dollar CAD is very, very close. Be nice if they can get up and do a double top there. Potentially that'd be a nice little short. Apart from that, there's not a lot else coming up on the radar at the moment. New Zealand dollar CAD potentially, and New Zealand dollar US dollar. So New Zealand dollar CAD has just taken that liquidity out. We haven't got extended yet though, so it's got to be a really good opportunity to want to get into it in a minute with what's going on. And New Zealand dollar US dollar. So there, nothing particularly exciting. So again, nothing extended. We've got a lot of movement going on at the moment like this. So obviously we're not getting the extensions. Hourlies, we got Euro New Zealand. Again, massively extended to the downside on the hourly. We've got 70 on this. So regardless of what your directional bias is on the euro, after a big strong push, we will get a pullback. Look at that one. That's all you got. Look at that one there. That's all you got. Look at where we're going now. Don't expect much. Yeah. Look at levels where we're going to pull back to. The euro is a short. The New Zealand dollar is a long. That's the bias. If you're trading this in that direction, you are 100% counter trend on it. So look for where we're likely to come back to. Yeah, these sorts of levels. Already got that one drawn in, really. Somewhere around there, maybe. Difficult to tell. Yeah, it's that zone, isn't it? Somewhere in there, you're going to find potential resistance. So if you're going to take a long on this off of the hourly RSI extension, don't get any more excited than that. Yeah, so 5 minute reversal alert. Look for somewhere in the region of 50 pips to the upside. It's not even half an ADR, third of an ADR roughly, not even that. So that's really all you're going to get out of it. Obviously, the further it gets extended to the downside, the better. The more that elastic band is stretched, the faster it's going to spring back the other direction. So if we get to push down further and we hit ADR today, that'd be a nice ADR reversal. Everybody that's selling into this has got to take profit at some point. Yeah. Everybody that's sold into that took profit. Everybody that's sold into that move, accumulated, took profit. Everybody that's selling into this move is going to take profit. But you're going to get people taking profit and then people seeing value and jumping on short. So it's going to get pushed back down again. So there's not a massive amount of room on it. But that's all you got. That's literally all the opportunities that are out there at the moment on RSI extensions for mean reversion. So it's a really, really, really difficult week. We had a beautiful week last week, bagged an absolute fortune. And this week it's just finding it hard for opportunities. But as I say, at the moment, I just don't really want to take a lot of opportunities anyway. I just wanted to cover quickly as well. Ricardo, do you use close price for your RSI dashboard? Yes. Yeah. So always use. I never trade on candle. Always trade on candle close. Yeah. Main rule. Yeah. One of the rules. One of the things one of my mentors I was with for years. One of the first things he drummed into me when he was looking at what I was doing, how I was doing it, which was a total mess, and as everybody usually is. The first thing he said to me was, why did you get in there? So I would see this starting to go down there. I'd jump in there, with a short, and he'd say, why did you get in there? Because it's coming down. So, right, well, where's that candle going to close? What's that signal going to be at that candle close? This one here. I said, I don't know. So, well, why are you getting in? It's like, well, because it's coming down. So it doesn't mean anything. It can come down as much as it likes. 1 minute before the candle closes, it can go all the way back up there and turn into a hammer. So this bearish engulfing here, for example, is a bearish engulfing because it's closed. While that candle was being painted, it could well have been a hammer until 1 minute before that close. You don't know. So you always trade on candle close. You never wait. You never get in before you've got that signal. Yeah. Reversal alerts. They alert on candle close. Yeah. If it wicks up above there and then closes back down there, that's not a reversal. If it closes above there, that is a confirmation of bullish price action. Yeah. So the RSI dashboards work on the same principle. This updates when the candle closes. It doesn't update constantly while RSI is doing this. I don't care what it's doing. Do what it likes. Where's it going to close? That's what I'm interested in. Yeah. So this updates on close. Everything updates on close. You should always trade on candle close. You saw this. You've probably seen this in the futures. Yeah. You see me sitting in the futures room trading. And we'll be sitting there going, prices all the way up there like that, right? And so it's been coming down, and we've got this whacking great candle. I'll be jumping in 2 minutes before that candle closes because I will be anticipating that. Yeah. Until you get that, there's no confirmation that is that there's anything bearish or bullish happening. While price is doing this, it's a decision-making process between bulls and bears. You will find the vast majority of the time what will happen is that in the last 1 minute to 30 minutes of the candle. Yeah? Candle will close like that. Until that 1 minute or 30 seconds on that 5-minute candle, you'll have it going up and down, up and down, up and down, up and down. Yeah? So always trade on candle close. I thought in one of your videos you said you were using RSI with median. Yep, I do. Or median. 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 Always use median. But it's personal choice. Yeah. It's nothing to do with the candle closing. That median is what it applies price. The RSI is applied to the median price, the high-low divided by 2. So it's the middle of the candle is what that median is. It still only calculates when this candle closes. Yeah. Anyway, that's RSI. I just wanted to talk about quickly some aggressive drawdown control that I did yesterday on Aussie New Zealand. So I've got this Aussie New Zealand, which is in drawdown. It's been in drawdown for a while. You see, I took a $100 loss yesterday on this, and today I took a $1,100 profit. Where's Aussie New Zealand gone? There we are. So I just wanted to put this trade up just to show you what I did, just to explain drawdown control, aggressive drawdown control, a little bit more detail. So there's that's it, that one. And those two. Sorry. Let's drag them onto the chart so we can see them. So I've got on this running at the moment 4.23 lots. Yeah. As a short. Okay. So what I did yesterday was, because this one's getting a little bit out, well, it's not getting out of hand. It's 6% in drawdown, which is not a massive, I'm not that overly worried. It got up to 9% in drawdown yesterday. So I was looking to do something with it, basically. I've got 35% banked on the account. So, at the end of the day, if I shut this right now, I don't care if monkeys. I've still banked 29% on this account since I started running it. So, but what I did was yesterday on this one, we had this big push yesterday. Sorry, on the day before, on Wednesday, above these highs. Yeah. And we put a lovely reversal pattern in and we pushed back down again. Yeah. And then yesterday I saw us pushing up again, and I was expecting a pullback and drop. And I knew we had news coming yesterday for the Aussie dollar overnight. Okay. So what I did was I took an aggressive drawdown control position here as we broke this high, assuming that we were going to get a liquidity run of that and then a drop down. Yeah. Because we started to look a bit bullish, and then they came up and took the liquidity, which is quite often what they do before they drop. So this is the aggressive drawdown control position. This was a 2.2 lot entry because I had 4 odd lots on. So what I do with aggressive drawdown control is I put on 50% of the total position size. Okay, this is all taught in the bootcamp, but I want to give you a real life example of it. So got 4.4 on. 4 point whatever it was on, and I took a 2.2 short, right? Stop above the high there. Okay, so I got in short, and if the play didn't work out, I would take $100 loss. Yeah, which is fine, and it didn't, so I took a loss. Then we pulled back down again. So I thought, right, that is a liquidity run. And then we pushed up again. We put in an M pattern. And then we pushed up again and broke that high again. And it looked like we were going to get in with another position short. So we were pushing and pushing and pushing. And the bears were sticking their heads in going, nope, don't want to go any higher. And bear in mind, we're massively extended on this Aussie New Zealand. So I took another one. And you can see my stop up there. Yeah, so I gave it a decent amount of breathing room. Right, and then that one played out perfectly on the news. Right, so what I did was took an aggressive position, stopped out and failed. Took a second aggressive position, and then I had a pending order down there, so that if this position works, I'm adding to it. So I'm adding to the position that works. So I've got 4 contracts short, and my TP, as you can see, was down here. The reason the TP was down here, because this is where the low is. So I was expecting to challenge these lows on the back of the news if we got positive news, which we did. Yeah. So I took those off. Well, I didn't take them off. The EA took them off down there. Well, TP took them off down there, obviously. And I banked 1,100 on those, roughly. So 600 on that one, 500 on that one. Yeah, see they hit TP, so that was the one that hit the stop loss. So these are manual positions that I took. Then this position, which was the oldest position of this basket, I took that one off. So Aussie New Zealand, I'm not going to be able to scale out, I don't think, to see it. No, I can't go out far enough. But you can see where I took it off. So this morning I did drawdown control. Yeah, so aggressive drawdown control to get into high probability, high profit trades with a stop loss. So there's a little bit of loss if they go wrong, which I had one attempt which didn't work yesterday, and the second and third attempts both did. And then I used 50% of that profit to reduce the position down because I'm wrong. I'm wrong on it. The Aussie New Zealand is still going up. Yeah, I'm short. I've been short on this thing for weeks and weeks and weeks, and it's just grinding. It's one of those grinders which just, it will come down at some point. It's taking forever. And I'm waiting for this New Zealand dollar strength to give that a good kick down. So drawdown control was done there. I'll scroll back and you'll see where this position is from. We've got to go a long way. Bear in mind, this is a 5-minute chart. I can't change the chart because obviously the EA is running on it. Yeah, so this is an entry from the 10th of December. Yeah, we're in February, right? We're in February. So this is a 2-month squeeze that I'm in on the Aussie New Zealand. But I wanted to show you this as a real life example of position trading. Yeah, this happens. You will get into squeezes like this where the market just doesn't quite give you that opportunity to get out. Yeah, so got that position. There's another sell up there. And every pullback we've had on this hasn't quite been enough for me to warrant banking. Yeah, it hasn't quite been enough. So I got into another position waiting for the pullback, and we went into accumulation for a week. Then we pushed down, but it wasn't quite enough to get out of the position. And then, it's just been accumulating and accumulating and accumulating and going sideways. And then we have the odd push, got into another position. Yeah. So basically, just wanted to use that as a demonstration for aggressive drawdown control. And this is how it helps. So not only have I banked $500, I've also got rid of one of those positions completely. Yeah. So I've reduced the potential drawdown issue. If it goes further against me now, I've got one less position against me and I've managed to bank some profit. Yeah. So it's a good example of drawdown control. But I thought I'd just share that one as a real life example, of what goes on. And somebody asked me in the Telegram group yesterday, which is a valid question, and it's a question I get DM'd all the time, is when do I start doing drawdown control? When do I start doing aggressive drawdown control? At what point do I start worrying about positions that go into drawdown? And there is no answer to that question because everybody's got a different risk tolerance and everybody's got a different comfort level. Yeah. So I'm comfortable at the moment on this account because I've got 35% banked. I've only got one position on it at the moment. And it's sitting there in 6% of drawdown. Yeah. Some people at 3% of drawdown might go, I'm not happy with it. And they'll start closing parts of it off, which is fine. You can do that. Some people will start doing aggressive drawdown control when they've got 3 positions on. When it goes to 4, they go, don't like it. I'm going to start aggressive drawdown control and try and get out of this faster. Up to you. Personally, I start getting worried when we get up to about 5 or 6 positions. Because if it's moved 5 or 6 positions against me, it means we've got a minimum of a 3 ADR push. And if we've got a 3 ADR push against me and we haven't had a pullback yet, that's when I start getting into aggressive drawdown control. Because if you've had a 3 ADR push against you and they haven't done a profit take move to allow you out, you know damn well one's coming very, very, very soon. Because all these guys that have hit the buy button there have got to hit the sell. That's when you start doing aggressive drawdown. And that's exactly what I did on that Aussie New Zealand. Yeah. So I was in 6 positions on it. And I took 2 aggressives to remove one of those. And I'll do the same thing again if it pushes. But the Aussie New Zealand, obviously, yeah, you can see, I've been in this since December. Here. So I got in on this RSI extension. And look what it's done since. Gone straight into a trend. Yeah, it's a squeeze. This is what we call a squeeze. It's squeezing. Yeah, but after every squeeze, this is a squeeze in the opposite direction, what do we get? Profit take. What are we getting? A profit take. It's going to happen. Just waiting. You have to wait. And sometimes you get to a point where you've waited for so long that it makes you uncomfortable. And that is when you start to do aggressive drawdown control. You may get uncomfortable on week 2. Fine. You probably would have got a lovely position out there. You would have got another lovely position there. Lovely position there. You'd have got out of everything by that time if you'd have done aggressive drawdown control there. But personally, I'm happy to wait because I know the market does this. Push, profit take, push, profit take, push, profit take, push, profit take. Push, squeeze, push. We will get a profit take. Yeah, we're just waiting. And sometimes the market doesn't allow you out as fast as you want to. But as long as you're not having 2 or 3 squeezes happening at the same time, and it is incredibly rare that will happen, because you won't get that happening. They can't squeeze more than one currency at a time because they've obviously got a lot of money invested in squeezing and manipulating that currency. So they can't do it to the Aussie, the US and the pound all at the same time. This just doesn't happen that way. So when you get into a squeeze, it tends to be one. And while you're squeezing, obviously what is happening is all the other trades you're doing are playing out and putting money in the bank. And you're using this to control that as required, as I just did there. Yeah. So not only did I improve my position, I also banked 3% along the way. Yeah. So it's a good example. I wanted to just show you that this morning as a live example of drawdown control, because I'm just aware that for the last month and a half, I haven't done any drawdown control. I haven't shown any drawdown control, and somebody asked me about it, and I was like, well, that's interesting because I haven't done any. I've managed to bank all of this for the last 6 weeks with no drawdown control. So I thought I'd better show you an example. So there you go. Hopefully that was helpful. Okay, I remember a year ago in the live room. Blimey, do you remember a year ago in the live room? I can't remember last week in the live room. The Aussie dollar New Zealand dollar was the first squeeze I got into. Yeah, now so Aussie dollar New Zealand dollar squeezes a lot because, and the same is true of the Euro Swiss, yeah? So Aussie New Zealand and Euro Swiss and US dollar Swiss are the worst culprits for squeezes because these two are linked economically. So when they are happy trading partners, okay, but one is doing better than the other, you won't get much movement. You get a squeeze, right? This is quite a big squeeze, but it's no different really to this squeeze, is it? Yeah. And you see, I'm in this, but the reason I'm not in problems at the moment is because I'm scaling in one ADR apart, nice and slow, waiting. If you get in too fast, and this is where people go wrong with position trading, they get in there. Before they get to the top of there, they're in 10 positions and 20% of drawdown. You're dead. Yeah, this is why we scale our positions half an ADR to an ADR apart. We give the room to the trade so that it can breathe, basically. So Aussie, New Zealand, yeah, they're bad. Euro Swiss, again, Euro and the Swiss, both in Europe. One is the banking king, one is on its knees, squeezed to hell. And that's why you only short it. Yeah. But look at the exit opportunities, yeah? So if you got in long there, for example, you got out, actually. Let's pick another one. You got in long there. You got out. Hang on. Let me find one that didn't work. So this really, see, it's difficult to find a one that doesn't work. So even if you're getting in wrong, you know, if you got in here, for example, on that big push, accumulated and dropped, you got out there. You got out there. That one, you got out. The next opportunity would have been there. So you'd have been out there. Here. You've been out there. Hang on a minute, I'll find one. There. That one. Here. That's the first time you would have got into a squeeze on this. Yeah. So if you'd have been longing this any time from there to there, the sellers exited their positions and got you out. The sellers exited. You always had an out. Here, you got a squeeze. Yeah, so the same thing, Euro Swiss and Aussie New Zealand, when they move in tandem together, i.e. one weakens, they're happy to trade at a similar rate, but one is stronger than the other. That's when the squeezes basically occur. So this one you would have got in and you wouldn't have got an opportunity to get out. You would have scaled in, accumulated. Scaled in, accumulated. Scaled in. So I reckon you'd be in probably somewhere around 6 to 8 positions. Very similar to that Aussie New Zealand. That is where you would start to do aggressive drawdown control, and that would get you out of most of that position there. You would still be in 3 or 4, but you would have banked a load of money, done drawdown control, reduced the drawdown risk further, and then the profit take happened. Yeah. Whenever you get a squeeze, the way to measure it is with a fib. Okay. When you're thinking, how the hell do I get out of this? Look at where the move started and look at where the low currently is and look at where you're going to pull back to. A 38 or a 50. If you can keep your average within a 38 to a 50 fib retracement, bear in mind, after a squeeze like this, you won't be able to keep your average within an ADR, which is what we try to do all the time. If you can keep it within a fib retracement, that's where you're going to get your exit, because at some point you will get that profit take move. And this was off the back of news. And this is why we need to know about news. Everybody's like, why did that move yesterday? What do you mean, why did it move? It moved because there was news. That's what moves the market. You can't ask that question. If you don't know what's moving the market, you shouldn't be trading the market. So that is where you got out of that position. So if you'd have got into that squeeze, you would have been out of it. You may not have made a lot of money, but it doesn't matter. This is one pair out of however many we're trading. All the others we've been banking. One of them goes wrong, we get out of it with a loss, a small loss, or we get out of it with a break even. Doesn't matter, does it? It's 28 pairs. One of them goes wrong. Oh well, never mind. I've got 27 others which probably are going right. And US dollar Swiss as well. And the reason the US dollar Swiss squeezes, we had one of those before Christmas. I don't know when it was, but yeah, I mean, what will happen is when you get a weak US dollar, the Swiss franc will power up, as we know, quite a lot. When it wants to power up, it will power up. If you've got a weak dollar paired with it at the same time, you will get a squeeze on the US dollar Swiss, and the other way around as well. No matter what the Swiss franc does, if you've got a powerful US dollar, the Swiss franc moves won't be able to counter it. So the US dollar Swiss works very, very similarly to the Euro Swiss. You get the squeezes, but you had an out there, but accumulation, exit. Yeah. And think when you're in a squeeze, you're always going to be the wrong side of the moving averages. Yeah. And this is what these guys are here for. These guys are to tell you where we're likely to be headed, right? So when you get into this is a hell of a squeeze. You'd have been out of that. If you'd have got in there on that one, big trouble. You'd have got out there, you'd have got up there, and you'd have got out the entire thing there. But you'd have been in drawdown. You'd have been in pain. But the pain was completely removed when we had the profit take. Everybody that bought there had to get out their positions to make money, and that's what it drove it down. So the moving averages will also tell you roughly where you're going to go. So try and keep, if you're in a squeeze like this, try and keep your average somewhere around a moving average, and assume we are going to pull back to the 24 or the 72, because we always do. This is why these moving averages are king. These are the institutional moving averages, the monthly and the quarterly moving averages. So these are telling you what market movement is likely to be moving forward. If we are massively extended away from the moving averages, we are likely to pull back to the 24. So if the 24 is down here and you're up here getting into trouble, assume that we're going to pull back to the 24. There's your out. Try and keep your average there. Aggressive drawdown control to bring your average up within hitting distance to get out. You've got to manage these. This is why I keep saying the EA will do a certain amount of the trading for you, but you have still got to be in control of this. You are the trader. The EA is a tool to execute position management for you, to get you into positions. And if there's a big move overnight, like Aussie dollar, New Zealand dollar, that you are asleep for, the EA's job is to get you out when that move is advantageous for you. But its job is not to manage your positions. Your job is to manage your positions. You need to be in control of that bit. And I'm still in this. I've been in it since December. And you can see why. Yeah. It's a rare squeeze. It happens once or twice a year. And there's nothing you can do. But what I did yesterday, which is help myself out. But now, obviously, we've got positive New Zealand and a negative Aussie on the CAD. I'd be interested in drops on this. And again, 72. Yeah, at some point, look back in history. Has there ever been a point where this thing has not returned to the 72 moving average? You go back in history as far as you like, you'll never find one. Yeah? It'll push up, it'll pull back. It'll push up, it'll pull back, it'll collapse to 72. It'll go the other way, pull back to 24, 24, 24, 72, 24, 72. These moving averages will always, always, always get hit. Yes, it might take a couple of months sometime. But that's what position trading is. We're taking a position. If we're wrong on our position, don't take a loss. Just get out of it when the market comes back to the moving averages. It will always do it. It has to. Because if it doesn't, it can't make money. The market isn't there to make a loss. The market is there to make money. It's logical. It's sense. Yeah. Get in here. Short. Oh my God, I've got it wrong. Didn't manage to get out. Oh my God, I've got it wrong. Didn't manage to get out. Wait for it to come back to the 72. Escape. Get in, get in, get in, get in, get out. You might take a minus 1% loss. You might take a plus 1% gain. I don't know. Depends where you got in, what your position sizing was, etc., etc. But it will always, always come back. Everybody that buys has to sell. Everybody that sells has to buy. The market has to move. If it doesn't move, it doesn't make money. If it doesn't make money, there's no point in being there, is there? Yeah. So just wanted to cover that because it's that Aussie New Zealand is a really good example. And you can see how slow it happens, yeah? I've been stuck in squeezes, especially on the US dollar Swiss. It wasn't this Christmas, it was last Christmas. US dollar Swiss squeezed me. I think it was a good couple of months. I don't think there was anybody here that was in with me back then, but yeah, I was stuck in it for months. I couldn't get out, but I banked something like 12%, 13%, 15%. I don't know. I banked loads because every time that thing pushed, I took a profit, did some drawdown control and banked some money. It pushed against me again. I got in again, got out again, got in again, got out again. And I was, as long as the thing's doing this, yeah, if I'm in drawdown from up here somewhere, I'm just getting in, getting out, making money, doing drawdown control, getting in, getting out, making money, doing drawdown control, getting in, getting out, making money, doing drawdown control. And eventually I'll have done enough drawdown control that position has disappeared and I'm flat. And what I've got is all this in my bank. That's what we're here for, isn't it? Stick stuff in here every single day. Make sure that is kept control of. That's your job. Just don't put a stop in the market so that you give all your money over to the bankers and the market makers. Their job is to take your money. Our job is not to give them our money. If you don't put a stop in the market, you can't give them your money, can you? Position trading. That's what they do. They don't use stops. Do you think a banker sits there, puts a 20 contract short on the DAX and says, oh, we'll put a stop up there just in case it moves up? Of course he doesn't. It's going to cost him about £500,000. It's not going to happen. Don't do the same things they do. As everybody else does. Do the same things the bankers do. Anyway, that was a long-winded way of just showing you that drawdown control that I did yesterday. Happily, these squeezes don't happen as much as one would fear. Yeah. You could be talking easy about your old friend Euro New Zealand. Yes, Euro New Zealand. We had a squeeze on Euro New Zealand. Diamond is right. We had a squeeze on that as well here. This was the squeeze on the Euro New Zealand. This was an aggressive one. But you know, I got. I don't know when I got out. I got out of it here. I think, didn't I? I was playing. We were playing. Is this? You'd have to remind me, Diamond, if this is right. But I think we were playing the 24 bounce short here. And it went into an accumulation. I got out, I think, here before. Yes, I did, didn't I? Because I was out of this before Christmas and you were still stuck in it, weren't you? I was out here. The reason I was out here was because I did aggressive drawdown control on this liquidity run. And I rode that to completion and I was out. If you didn't do that, you were, and possibly are, still in it. But this is the euro, yeah? The euro is on its knees. Australia, the New Zealand dollar has been on its knees. This is why the euro's pushed. This is the only pair, really, that the euro has actually managed to go green on. But look what's happening now. Yeah. So if you were in this from there, and you got in there, and you got in there, you probably got in there and there. You're probably in 5 positions now. Your average is going to be here somewhere. Not far away, are you? The euro is not going to survive up there. It can't. So, yeah. But yeah, squeezes. And this is what I keep going on about, the 2-pair rule. Yeah. If you get into a squeeze on Aussie dollar, New Zealand dollar, for example. So if you're short Aussie, you're long New Zealand. Yeah. So if you're short Aussie dollar, New Zealand dollar, and the thing goes up like that, it's no problem. Yeah, because it's going to come down at some point. It's going to give you opportunities to get out, do drawdown control, and do everything you need to do along the way to make it less painful. If you also go short Aussie CAD, Aussie US, Aussie yen, and you go long pound Aussie, you are now short the Australian dollar 5 times. If the Australian dollar goes on a mission, your drawdown is 5 times larger than it would be if you'd just taken that one position. Yeah, and this is where the two position rule comes into it, basically. If you go long GA and you go short AN, right, you are now short Australian there, short Australian there. Australian dollar is off the table. You do not take another Australian trade until one of those is gone. When the Aussie dollar, New Zealand dollar is gone, you've banked that cash. Now you're open, you can take another Aussie trade. The people that go, oh, this is suicide, you're going to blow your account, are the people that are trading 28 pairs, all of them, in the same direction, and they're getting in with 1% risk on every trade. Of course you're going to blow your account. If you don't use a stop loss and that thing goes skyward and you've got 6 of them short, you've got 6% risk on, and it moves 1 ADR against you, you're in 15% drawdown day 2. Of course it's going to go wrong. Yeah, the DMs I get from all the haters and this is absolute suicide. No, it's not. It's exactly what the hedge funds do. It's not suicide. The hedge funds go into 10 to 15% drawdown regularly. So do I. You know what? I've made 30% this month. How's everybody with a stop loss done? You know, that's always my answer. P&L. Show my P&L. You know, at the end of the day, you either get it or you don't get it. And that's what I teach in the bootcamp, exactly what I do and why it works. Because I know how the market moves and how the market works. So you just have to be patient. Everybody wants to become a millionaire and earn that Lambo. Unfortunately, that isn't how trading works. I wish it was. I'd love a Lambo. Big Lambo fan. Unfortunately, though, you have to get a big gold medallion to wear around your neck when you have a Lambo and a hairy chest. And I haven't got a medallion. Anyway. Okay, your older course videos used to say, plan every trade with the idea that you will be wrong. Do I not say that in the new ones? Maybe I do, maybe I don't. So the pain isn't unexpected or unbearable. I find a lot of emotional stability despite an occasional squeeze. Yeah, so exactly right what RK's just said there. If I get into a position here, the first thought that goes through my brain is, if I'm wrong, where's it going? Where am I getting in next? Yeah, that's my first thought. So if I was going to take a short here, I wouldn't because it's extended. If I was going to take a long here, I wouldn't because I'm short on the euro. But let's say I was going to take a long here. The first thing I'm going to do is, when I take that long, is I'm going to think, right, if this doesn't work out, where are we going? Well, obviously we're going down to the 72. That's my first thought. So if the 24 bounce doesn't hold, which is kind of what we're playing here, I'm assuming we're going to get a 72 bounce. Because we always do. We get a 72 bounce. That's why the 24 and the 72 are here, because these are bounce points. They're quarterly and monthly movements by the market. If the 72 bounce, we don't get to that, where are we likely to get to? Well, there. That's the next level of support, isn't it? Look. Yeah. So if I'm wrong here, my next position will be here. If that one doesn't work out, I'm assuming we're just going to come down into this gap and do a 72 bounce. So position 1, position 2, position 3. So I hit the buy button there and I go, I'm probably wrong. If that goes up there and I get out, fantastic. But that is where I'm getting in next. And what I will do is set the EA to be taking trades for me, roughly half an ADR apart. And it will do that for me automatically. And then when I do get that 72 bounce, the EA gets me out. Thank you very much. Because look how far this has moved. And we haven't had one green candle. Yeah, everybody that started selling here and is still selling hasn't taken any profit yet. If we get all the way down to ADR today and nobody's taken a profit, what do you think they're going to do? Take a profit. If they don't take a profit and they get down to there, what are they going to do? Take a profit. They're going to take a profit at some point. That is the whole premise of market movement. Sellers have to become buyers because if they don't, they can't make money. Buyers have to become sellers. And this is exactly what we do, yeah? What we're trying to do is ride that wave. Yeah. But when we get this right, we get in here and price moves up, what do? Get out of our position. To get out of our position, what do? Hit the sell button. Well, we don't. We hit the close button. But what's happening behind the scenes is a sell order is entered into the market. We become a seller to take profit. There you go. That was half the bootcamp covered in an hour. Not even that. It was an ADR reversal alert that just kept going. Yeah, that was, wasn't it? That was right, Diamond. That was a horrible, horrible trade, that Euro New Zealand. It was an ADR reversal. But we were extended as well. So there was confluence. There's nothing wrong with the trade entry was spot on. It was an ADR reversal with a 4-hour RSI extension. It was extended on the hourly probably as well. We got a lovely alert. We'd pushed. We hadn't done a big profit take. It was like spot on. We're in a massive downtrend. And we got a bounce potential at the 24 moving average. It was just textbook. Look, it was textbook entry. We just done a liquidity run, I think, as well. Yeah, it was like it was there. It was that bearish candle there. That's a bullish one. It's the one next to it. That was the entry. It was spot on, but it didn't work. But that's trading. If they all worked, we'd all be millionaires. We'd all have that Lambo, wouldn't we? But anyway. Okay, yeah, maybe you do. Haven't been through them all. Still making money from the old course. Cool. Yeah, I'm pretty sure I do say that in the bootcamp. That is key. You have to plan your trades. You've got to plan your entries. Yeah, so when you're getting into a position, that Aussie New Zealand dollar, that short that I took, that aggressive drawdown control, I had a plan on that. So the plan was if I get stopped out on it, we were already extended. The likelihood is we're probably going to get that strong move down again. So my plan was if I got stopped out on the first one to get in again. And I did. But when I took that short, one of two things was going to happen. It was going to work or it wasn't. If it didn't work, that was plan B. You've always got to have a plan B and a plan C and a plan D. Yeah. But all it is support and resistance. The market moves on support and resistance. It has a memory. Yeah. That's what it does. It pulls back to moving averages perfectly, and it uses support and resistance as bounce points. Yeah. So your plan is always going to be, what if I'm wrong? Every time you hit that button. If you're not using it, if you're using a stop, it doesn't matter, does it? If you're using a stop, your plan is, if I'm wrong, I'm going to give them my money. Not much of a plan, is it, really? But that is your plan, basically. As soon as you enter a trade with a stop loss, you are 50 to 60% likely to lose. You don't have a plan B. Your plan B is, it's come back down my way. I'll get in again with twice the position size, and I'll put my stop up there. And then they do that, and you go, oh, right, that's it. I'm going in with 4 lots short. Oh, damn. I've lost 20% of my account. That's what they do, isn't it? Stops. They make you go tilt. You go tilt, you blow accounts. It's just psychology. We're not built to trade. It was a beautiful entry. Yeah, I'd take it again. Yeah, cool. So yeah, we went off on a bit of a mission this morning, didn't we? So, but there's no setups at the moment apart from Euro longs. As I say, I don't really want Euro longs on at the moment. Euro New Zealand is also extended. So yeah, I mean, we're looking at it now. It's a beautiful setup. We've had a very, very nice push down. So it's a second leg accumulation we've got going on at the moment. First leg accumulation, second leg. We are likely to come back up to here on the bounce, and that will probably be part of a third leg accumulation down to here. So if you want to take this long, it's a scalp. But that's all you're really getting at the moment because nothing else is extended. Oh, Swiss yen we've just had hit. Let's have a quick look at that one before I disappear. So yeah, it's an ADR low hit. Lovely ADR bounce, but you've probably missed it. I haven't got it yet, actually. Haven't got the reverse alert on the 5 minute yet. I'm unsure on Swiss yen direction as well. So, like I say, just be very, very careful at the moment. Yeah, if we've got bombs flying already in Russia, and Russia haven't even gone in yet, I'd just be very, 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 very careful. So, short-term scalping is basically what I'm doing, which is what I'll be doing again on futures this afternoon. So I'll be doing a bit more futures later. If you want to join me, 2 o'clock this afternoon. News-wise, obviously, just be aware of the Philly Fed at 1:30. That's all we've really got today. Apart from that, it's G20 stuff, which probably isn't going to do an awful lot. But your main news catalyst today is going to be whether or not Russia decides to cross that border. And if it does, yeah, hopefully you're the right side of it when they do. Because if you are, do you know what today? And I don't do this anyway. So whenever I'm taking trades with my, whenever I'm scalping, I'm using my EA at the moment. I've got a feeling this is all set up for auto trading. It is. Hang on, let me just turn all this off. Don't want it to auto trade. So I'm basically at the moment with every position that I'm taking, I'm sticking massive TPs on everything. Yeah, because if you go long on this right now, and you're in this trade when there is a news announcement and this thing does what the US dollar did on the back of that news this morning, early hours, don't limit your upside. Yeah. When you're scalping, limit your downside, but don't limit your upside because you will catch one of those. And when you catch it, you want to make sure it's properly caught. And also I've got mine set up to scale in as well. So it will automatically get me in, and I'm setting this at the moment at 200. So basically, if we get one of those massive spikes, what will happen is I will get into a position here, for example, with a stop. If it goes like that through the roof, it will just enter longs for me. As that move happens, that percentage figure that appears there, that's a dollar sign. I can't even draw it. That percentage figure that appears there, I can't draw a percentage, look. Brain, draw it. Now that just looks like a bloke with a big nose. That percentage sign basically goes through the roof. Yeah, so don't limit your upside today if you're scalping. If you're taking trades on any time frame lower than M15 or lower today, forget TPs, right? Because if you do get caught the right side of one of those moves, let it go, because the chances are it's going to be a biggie. Yeah. You want to catch that, don't you? That was 10 minutes. We did basically pretty much an ADR in 10 minutes. And same with that US dollar move. So yeah, just limit your downside. Don't limit your upside. Give yourself a chance to get a lucky trade. Lucky trades will make your bank very, very happy, obviously. So. Right, so I'll leave it there today. I'll be back at 2 o'clock this afternoon. As I say, I've turned the EA off for the moment. I've got too much banked to put it on the line in case I get the wrong side of a Russian invasion. From a financial perspective, obviously. I don't want to be the wrong side of a Russian invasion in the real world. So I'm just going to be literally scalping at the moment. I'm just today is my testing the EA out, and I'm going to record a video hopefully this morning, which I'm going to put in the Telegram group, which is just going to go through all the settings in here and everything that this EA does, so that I can see I just want to gauge what everybody wants and what everybody's thoughts are on the way that I have it done at the moment. I've got it set up basically for me to trade the way that I want to trade with it. But obviously, if I'm going to push this out for people to use as well, I want to see what everybody else is interested in. So I'll tell you what it does, why it does it, why I've built it to do it this way, and the logic behind what I'm making it do. And then obviously we can discuss from there. So that's my plan today. I'm more live testing on this. So we'll be spending some time this week making a video for the Scalp EA. I just answered that question, Rahat. That's my plan this morning. Yeah. Obviously it's not finished, so this is still in development. But obviously I don't want to develop something, push it out, and everyone moan at me because it doesn't do this, doesn't do that. I'd rather know what you want up front. It just makes my life easier when I release it. So yeah. Okay, so that's all I got for you this morning. I will be back at 2:00 this afternoon. We'll see what's going on with the markets. Trade safe out there today. Just, I hate to say it, but do use stops just in case, especially if you're getting into any aggressive sizing, just in case. We don't want any surprises like we got on the US dollar happening to us in the wrong direction. So hopefully you have a good morning. I'll be back at 2:00. Anything you need, come into the Telegram group. I will be in there as well, and give us a thumbs up if you like the video, and I'll see you at 2 for a bit more futures action.